Hey everybody, welcome to your daily update for SOL and BTC. Hopefully you're enjoying the Sunday pump and the short squeeze, which has kicked in. Certainly the people in shorts are probably not enjoying it, but that is the market. So looking at liquidity, 116k to the upside, or 115. It's kind of got a couple of clusters there on BTC, and still got clusters to the downside. It's definitely tipping to the downside because more people are starting to chase the pump and the longs are piling up. So if it becomes worthwhile for there to be a dip, there'll be a dip. And we've still got all those high time frame targets and reasons that we could go down. So when we look at these charts soon, it is also looking like we're basically just seeing one really big deviation of trend. And it was quite clear on the weekly that in the last few moments they pulled it back up, which was sort of stopping an absolute catastrophic fall, really. So looking at the liquidity on SOL, everything's sort of up to about I get it right, 219 is up for grabs, and anything sort of down to about that 197, 198 is still in play. So if we dial it up and look at the 7-day, 7-day is anything up to about that 221, 223 sort of number, maybe a little bit more. It's actually cutting off around that Trump trend, which is sort of a bit of a worry. We might just go back up there and have another rejection around that 226. And the bottom end of the liquidity is all the way down in the 180s, but the big spike area is around that 200, where a lot of people's stop losses will be sitting who have started to bring in longs as the price has been pumping. For the BTC side of it, then it still says we can go down to 105, 106, but the bulk of it is 107, and anything sort of up to about that 116 area. Again, starting to look a little bit too much, like the longs are starting to take over a bit too much on BTC, but SOL's still pretty even. If we go to the 30-day, 30-day actually doesn't look that out of balance, which does imply that they might just keep pushing up for a bit. Or they could go down and give shorts some hope. Thing about shorts is once you've got them trapped, it's just an infinite means of generating money or bankruptcy, because people can just keep on covering a short until eventually they have nothing left in their account. Whereas a long just gets stopped out for whatever value is in the long. The collateral is the collateral, and yes, you can add and all that kind of thing, but there's always going to be a 0 point, like how far can they push price down, whereas they can just keep pushing up into shorts. So it's yeah, there is this thing called zero if you go down and basically try to wipe out longs, but there's no stopping how high you can actually push a short. So hence they always tend to take a lot more longs and then they go after the shorts aggressively. So but yeah, numbers pretty much looking the same. Yes, there are 105 is on the chart, so is 104 for that matter, but really if they went down and hit 107, they've taken just about everything on BTC that's in that 30-day realm, and 120 sort of would be the top side of the 30-day. And yeah, SOL, it's still really the 180s at the lowest, and around that 231 at the top side. 231 is actually the target for the daily trend break, so doesn't surprise me if just simply the daily move goes and takes all of the 30-day liquidity and then rejects off the backside of the daily range. So let's look at that from a pretty color perspective. Isn't it nice to see a short squeeze? As you can see, they come down, 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 aggressive pump, and that traps all of those shorts. Give them some hope. Right? So this takes out some of them. This gives the others hope, and then let's go again. And then that's basically, trapping these ones up here to the top side. So that is a short squeeze. There is not too much different in the levels on those charts, so we won't bother going into those levels. Let's have a look at these charts. Okay, so SOLBTC Strength is bouncing off the hold level. It's above the trend. It doesn't really matter what this does today. I mean, if it closes down, it's got a nice long wick on the bottom of it, and it creates a really favorable support trend. If it closes up for the day, it breaks the downtrend. So, one way or another, it's good. You either get more support or you're breaking trends. So there's not too much to say about that other than it's bullish. The weekly is creeping back up inside the trend. Ideally, we do want to see the weekly get up a bit higher, but it's got ages to do it. So it's got 6 days. And the monthly close in 1 day, again, it's bullish. It's performed a rejection. If it actually ends up closing down, it's not really a big deal because it creates support. It's still above the range trend. It would be probably good to close up just purely because then you've hard closed the monthly break level. So let's just vote for closing up and see if that happens. If we do end up closing up, we'll probably just we could trigger a retrace. We might bounce off one of these levels again, and then damn, so many alerts lately, and then heading off to the upside. So that's looking pretty good. There is one bearish scenario, and I don't think, no, we actually can't really do it here, so I don't think it's actually even applicable. But when we look at the other charts later, there is one bearish scenario where we could reject to 189 on SOL. Okay, looking at the safety assets. So rejecting the trend, yay. Rejecting the hold level, yay. We want to get down below the break level. So we're still aiming. We really want the daily close to be back under this break. We just want this thing to start going down. And it does sort of have an obligation to come down here and do a retest of the 64.68. Like, yes, it's got an obligation to go do a retest up here of the 66.18 as well. But what we have done is very cheekily, we have created an origin level rejection point at 65 points. So this is now an origin level. Get my typing done. So this is now an origin level at 65.92 on the daily. If we hit that, we go to Goblin Town. So which is almost a bit of a trap, because if it comes up here to do a weekly retest, it's going to run into that, and that'll send it backwards. So one way or another, I think this thing's going down. It's just, does it push through with the hope of getting to that weekly retest and then just dump, or does it just stay under this trend? So it's looking good. We should, and like I say, the obligation is there to come down and do a retest of this break level. So the difference structurally between this break level, which is basically a 1 day support, because it wasn't tested and rejected. So it was created, it was tested, it was overcome, it was hard closed. It's 1 day support, price continues up. This break level that's up here is a bit different. It was tested, it was not overcome, it rejected, it's had further time spent under it. If it comes back up here again, there will be a massive amount of sell pressure, when it gets to that, or in this case, dominance pressure. But yeah, so that's looking good. So yeah, ideally, let's close down. The best thing this could actually do for risk assets is to close below 65.04. Jeez, go away. And if it did that, you'll have a proper distribution range here. You'll have a distribution daily hold level, and this thing is dying. So, and then risk assets are going to keep on pumping. Okay, looking at the weekly, rejecting, cool, got lots of time to go. Looking at the monthly, dangling. And what we're aiming for is this to close down for the month. If this can close down for the month, and to be really bullish, if this closes down for the month with no wick, and the trend shifts to the bottom of this, and it just opens on the other side of the trend, then parabolic altcoins. So that's what we want. If it does close just fractionally down and the wick's on the bottom, then the trend shifts. You might get a pump first or a bounce first, but we'll look at that on the monthly. And so the total market cap is bouncing. This is actually, again, really good. It's this was really dodgy. I don't know. Like in the Discord, I showed what this chart actually closed like. I don't know if anyone, if anyone's got that, you'll see that the chart has actually changed. The candles are different. So from how it actually closed, which is just kind of makes you wonder how much of this stuff is real. But anyway, we bounced, we went up, we're over the trend, we're going to break the trend, we're going to shift the trend. So so we may get a rejection off the backside of this trend and a push back down. But overall, it's looking bullish. So if we do get that rejection, great. It'll just give us an opportunity to buy. Everything is looking very much like it's building support, and dips are worth buying. Okay, looking at it from the pure USDT perspective, we're going to get a trend break today. Get rid of that alert line now because we've hit the target. Yeah, there's not too much more to say about this other than we move our trend to the top side. So we'll go to here. It's in a great position to open just directly on this other side of it and keep moving up. Ever since it bounced off this trend and created that first hold level, it's been trying to get back up to these 3.7s to do a retest of this range. So it's probably going to keep on going up. Looking at that, we may then get some kind of retrace or rejection in there, but there'll be support, so not a big deal. And weekly, lots of time to go, but this is what happened yesterday. The candles just pulled back up and it opened up back inside the trends. So it's just it just showed a lot of intention that they were trying to get everyone shaken out. They weren't hitting the break levels to the bottom of the ranges. Everything looks doom and gloom. Bear market's on. Give up, give up, give up. Price pulls up. Last minute, opens over the top of the trend again. Oh, hey, look, jokes. So, and over on the monthly, it's creating a hold level. So if it stays like that, it's got more support to break the upper trend. So that's good. Looking into BTC. So BTC is actually very bullish. It's already come up and hit the back side of that range. So that range retest is now complete. It gets super bullish if that actually gets up above there and closes, because it could bounce off that as support and continue up to the whole target here in the 115s. It'd be really normal for that to have a rejection, so close just underneath and then have a retrace back to the range trend or some kind of support. We can probably, this hold level that's back here, you'd have to look into this, but this could be what's called a reverse level, because this has powered through it. And arguably this doji may not be a hard close. If not, then this level can support price a secondary time, which means it could actually just come down here and then bounce back up again. And if that doesn't support it, then it's back inside the range trend, which is coming through there, which is how they did all this. They pushed it back up yesterday, just snuck inside the range trend, bounced off the range trend, and went up to the hold level. So that's all very much algos moving price the way price moves. 2-day deviation, so no loss of trend, back up inside the range, looking to push up. This is an origin level up here though, so this 116.984 could cause a problem. So that's that could be a area to place an alert on. So crossing up that. Yeah, we want to see if we hit that and what happens when we hit that. It's all about how does it get there too. So if it just keeps pumping irrationally and hits that, the problem is it's from the underside of the trend. However, if it gets up over the trend and then bounces off the top again and then goes up, then it's easier for it to find support later. So yeah, we've got some pretty old levels. Maybe there may be another reverse level here at 116. So if it creeps, it's been hard closed. Yeah, it's been hard closed. Nah, so that'll probably reject. So, and if that doesn't, something up here will. There's plenty up here to reject. Once we get into that 119, 120s. Okay, looking at the 4-day deviation. So picture perfect, really. So if you look across here, these candles are the break candles. It's come down here, it's retested the range, it's bounced off the range, it's created a trend, it's failed to close over the trend, it's come back down to test the range, it's bouncing back up again. But in this case, it's getting back up into the range trend. So as long as it closes sort of over that 113.6 for the day, then it can bounce off this range trend and then come up here and target this 115.8 area. So that's looking bullish. This could get real bullish real fast if it gets up and closes over that candle that fully engulfs the 115.230 by the end of the day. But I don't know. Don't know if they want to pump it that fast, that hard, but we'll see. Sometimes the point of these kind of rallies is to just leave everybody behind and then they all buy the top after the FOMO kicks in. Okay, 8-day looks like it's coming up to try and do the same type of thing we've been seeing on all these other time frames. Looks like it's trying to open back up over the top of the trend. Anything from the price it's at now of about 114.239 or higher is going to let it do that. And some of these, some of these ranges are just a bit out of whack with where the trends are, so we'll have to redo some of those trends. Some of these bigger trends, I mean. What do we got going on here? So the 16-day, this is trying to pull back up above the range trend and trying to head up to 119. So that's looking bullish as well. That move is done. Get rid of that. And that's not going to stop it. It's going to be able to get through that, I'd say. It may not do it the first time, but this is not a full distribution range. It's just single candles. So if you sort of look at this, you got 3 candles of accumulation. Then you've got single, single, single. So this is just consolidation within the accumulation range. So it's not, I don't think that would stop it at all. So this is heading up towards a break level retest, 119.8. It's pretty bullish. It may open on the wrong side of the trend. Although I'm saying that interior is gone. It's broken anyway. So this range has actually changed. So it's probably, yeah, that's more your local range. So yeah, it's looking like it. Yeah, so that could potentially come up there and reject. This pattern in the wicks, where that wick goes up above that one, comes back down, implies that if you found a lower time frame, there'd be a origin resistance level coming through there. So, and that might line up with a retest of the backside of the more localized trend. So, yeah, that could reject around that 120. This is found support, moving up. That's about all we can say about that one. This is indicative of a top though. So we will get a downtrend there, which forms today. So that's going to mean 115-ish could be problematic. Anything above 115 could be problematic. It may cause a dip or a dive through the support trend, and then and then the longs would kick in because everyone's missed out on the pump, and then they'd bring it back up. Now, the fact that accumulation naturally did not keep up with the up-facing trend means that up here somewhere around that 130 mark may be where we actually hit a bigger rejection and a bigger downtrend. So just keep that in mind. 130 could be a problem. Then over on the 68-day, we haven't hard closed over the top side of the trend on the 68-day. We also haven't touched the range trend. It bounced off the local uptrend rather than the range trend, and it hasn't hard closed 108.350. The range trend sits at about 106, 107. So yeah, this is potentially going to do a secondary candle to the downside. So that's possible. And this is where our 93 targets start to come back into it. The 93 is not out of the woods until we hard close high time frame above 108. So, and yeah, just our weekly. So our weekly it did what it did. It pulled back up into the range. I did a little short YouTube clip on this the other day. This is, we've lost that range once, and it was nasty losing that range. We're really, really lucky that candle pulled back up yesterday inside that range, and now we're bouncing off that range. So we're safe for another week at least. So that's any dive of that will just be a dive liquidity grab. Looking at the 136-day, this is another one that does sort of say, hey, yeah, we're going to go back to 94 at some point, 93 at some point, but at some point, it can be a long time within that time. So, and this is still touching that up facing trend. So, until we get a candle that's not touching that trend, then you got a problem. 2 week hasn't hit its support trend, new support trend yet. So maybe we do get a little pullback to hit that trend, and then the epic pump up to the top side, which is going to be around, anything in here. So this is sort of 127 through to 129. Yes, that would be where I'd say you might run into a top, especially if everyone is calling for 200 or something when we hit there, because everyone was calling for 150. So with everyone calling for 150 and now these sort of rejections looking like they're forming in the 130s, 128, 126, 130, that sort of area, maybe that becomes a top. So, or at least becomes a big retrace back to this new trend, which is the other option. If that just keeps going, it hits their rejection, comes back to the trend to try and go up. And looking ahead at the monthly, if BTC, come on, trading view has gone so laggy. If BTC, come on, oof, almost impossible to use. Just going to pause this for a sec, see if I can get this thing to recover. And we're back. So if BTC closes over, wrong tool, that wasn't TradingView's fault, that was mine. If BTC closes over 115,707 for the month, you'll have a monthly hold starting to form. Right? So that's, you'd want to look for some kind of key area in there, because quite often, as you can see over there, when you get a single candle engulfing a single candle, it's not actually a monthly range, because you need 2 candles after for this to be a true monthly hold level. So if this closes up above there, then we start to look inside this candle for potential areas of retracement. And then that retracement would lead to the next candle being created. So like in this case here, this one closed above this one. So we start looking anywhere from that candle top down, which is actually up inside the wick of this candle. So we start looking anywhere inside there for something that could support price. And in this case, it didn't come very far down into whatever was in there. And it also sort of didn't quite touch the trend, and then it went up. So in this case, if we close the month over this level, we just look for any kind of support we can find inside there. And then we look at those levels to see if they have confluence for any sort of dip. And it probably will be something in line with that trend that's coming through there, because all these things tend to just gravitate to areas of confluence. So that means, funnily enough, a dip maybe back to 114, which is pretty clearly been a very important level for BTC for quite a while. Okay, right, let's have a look at SOL. Yippee-ki-yay. So SOL has generated a trend yesterday. It generated a hold level, bounced off the hold level. It's still going up. Surprise. So next real resistance is going to be some of these older range trends coming through here, which could reject it around 218 or 220s. But what it's trying to do, ever since it broke this little dashed trend that's coming down here with that hard close and made that hold level, what it's trying to do is ladder itself up to do a retest of 231. So the end game is 231. There are things in the way, but it's going to try and get to 231. And then after 231, which will probably create some kind of rejection. I say probably because, you know, they could just turn the bull tap on and it could close back up inside there. And then the next target is it's going to try and hit 238. So, and I wouldn't expect any kind of real issue with the daily until we get to this origin level up here at about 249. And then that could create some kind of rejection. And you got the trend just above it at 252. As soon as you get into that area of a previous high, there's always going to be people who are going, I wish I'd sold there. I've just been through all this pain. I've just seen it drop, you know, $60. I'm going to sell. So there's always going to be psychological, you know, rejection up there. But I think this is going higher based on the higher time frames. 2-day breaking trend. Trend's going to move. If there's no wick on the top, it's just going to be a repeat of basically what we've just talked about with the 1 day. We do have some kind of, we do have a range trend coming through here at about 216. So the range trend on the 2-day is sort of confluent with the older range trends on the 1 day. So anything between 216 and 220, there might be some kind of pullback. But we're moving back up above, you know, some high time frame support. So these numbers like 206 and 208, and they're all support levels now. And we're hard closing once again, you know, any of these sort of support levels that are down in the 190s. So this is all looking very bullish, at least for the short term. It's going to try and push its way through to 231 on the 2-day, which is a backside. Technically, it's the wick. It's the most reactive point of a hold level on a 2-day. So either that or it's going to aim for 234, which is a sort of a greedier point, but it's looking positive. It wants to keep going up. And we're going to get a downtrend created on the 4-day. It's going to open on the correct side of it. I say all this, by the way, like, because I'm actually feeling probably a little bit bullish and a bit biased, but they could just, of course, dump everything by $20, you know, before close. There's still 2 and a bit hours to go. That'll change things a lot. But, you know, we look like we're going to open on the top side of this, and that means it's just a complete deviation, a liquidity grab from the lower hard closed ranges, and it's going back up. So this is some kind of, this 191 was some kind of lower time frame origin level. You can see from the wick, blue wick goes above the previous one. So you can't create an origin level by rejecting in consecutive candles like this. It's not possible, but you can create a origin level by having rejections that have space in between the candles, so like one's down lower. So fractally, so this is advanced masterclass stuff here. If you're looking at something like a 4-day time frame and you have this pattern, if you turn down the time frame, you will find a point where there is a candle between these two. And if that candle did not touch these top two, then there is a lower time frame support level that was generated. It was resistance initially, which caused this dump. And there are certain polarized support and resistance levels that on lower time frames can affect higher time frames. And they're the ones that catch traders out, because, you know, you're going, oh, look, I've entered this long and I'm going to go to this level. And you don't realize that there are some time frames that have the ability to reverse bigger time frames. There's certain structure that can do that. And fractally, I know by looking at this that there is one in here, and that is what it has found support on right here. So this in itself right, is not an origin level on a 4-day, because this can't create it. They're consecutive. None of these closed underneath it without touching it after the first touch of it. So this does not qualify as one on this time frame, but it does qualify one as a lower time frame somewhere, and that was able to support it. So it's looking pretty good. It's going to create the trend. It'll probably break the trend, and after that, it should just keep on traveling through to try and find this hold, which, you know, gives rejection points between 230 and 242 for some kind of ranging. But I don't think it's going to be the end of SOL. You know, it's regaining too much support, and they're being too bullish with how they're closing things. Like they're just purposely shoving it up in the last minute and then making it good. So yeah, you could see a rejection up here, and maybe the deepest rejection from here would be these 199s. So and if there are some higher time frames that could lead to lower than that, but it won't just be a straight line, because it would sort of go up, and if you did reject, it would come to the 199, and then it would go up and it would reject off the backside of something that hasn't happened yet, and then it would go down to whatever the higher time frame one is. Or the other option is there'll just be some scam tweet, scam wick tweet, dump, pump, 500% tariffs, and then 12 hours later, oh, that my account was hacked and that wasn't me, that kind of thing. So 8-day, moving back up above the trends, super bullish if it closes over 216, but it's perfectly fine to close where it is here now. Absolutely perfectly fine. So, yep, not much changing in there. Bounced really cleanly off that hold. So, looking good. Okay, this is the first one that everyone should probably keep an eye on for the daily close. So this is the 16-day. We may have a level of polarity showing up here. So it is 214.324. If it closes over top of that level, then we're all good. We do have a break level there that is about, funnily enough, what's that, 219. So it would take time. It would take like a whole nother 16 days completely below that without going back there. It would take quite a bit of time to make that into high time frame resistance, but it is potentially going to do a dip if it stays under that 214.324. So just very quickly show you what I mean by polarity, because I talked about this in the Discord today, and I think I could just feel that they were staring at me with that weird looking Elmo retard face where he doesn't know what he's talking about and just looks at you. And so when you start getting close to the point where price matters in time, you can often find that it will either continuously reject on a lower time frame, or it'll continuously try to stay above. So it's really, really simple. You just put a line on the point that matters. In 2 hours and 31 minutes, being above or below here means something. So now let's just go down and pick a really low time frame and look at it and just see what is it doing. And you don't worry about back here. It's too long ago. But you start looking here and you go, oh yeah, why are we rejecting off this? Are we creating any kind of lower time frame resistance? So we haven't hit that break level on the 15-minute. We haven't created a full distribution range. So far that's not looking too bad. That's not really indicative of low time frame polarity or reversal. So let's look at this time frame. And you can see when you start dialing it down how many times it just will not let the candle close above that level, because it's of importance very soon. Sometimes it goes up and down, but you know, like frustrating and annoying because you're trying to figure out what their intentions are, and you really just got to wait for close, you know, to actually figure it out. But even on this, it's like consolidation, 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 ranging, consolidation, 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 consolidation. So we do have a range in here. We have this range, okay, on the 5 minute. We've got a break level. We've hit the break level. We've hit the break level again. We're under the break level. This level here is becoming 5 minute resistance, which will be applicable to something like 15-minute price action. So yeah, it's looking like they don't want to close over that. So that could imply that we might see, you know, if there is still enough time in the day to come up, reject off this, come down, build a trend, get over the top of it and bounce. But this is the first sort of sign of polarity. So that's the next time you're in the Discord and you see me talk about this kind of stuff, you don't need to pull the Elmo face on me anymore. Okay, back to these charts. Where are we up to? 16-day? Leave some stuff in the comments too if you just want me to shut up and make these things faster and not talk about that stuff. Okay, the 17-day, pull back up above trends. This is insane. This is good. This is great. Okay. This is high time frame polarity. So price came up, never hard closed above, came down, didn't touch it again, went up, full on rejection. So that was, you know, 194 down to 156, got back up, hard closed. This is the retest candle. This is really bullish. Like, this is crazy bullish. This is 259, 264 bullish. So enjoy that. Don't get liquidated by putting the house on it. Be careful. We can still go down, but we are really, really, really likely to go there. It's like when the price was, you know, $8, $20, and there was a high time frame level that said we're going to go to 202. It's just a matter of time. Don't get caught out. So, right. 34-day. So closing above the range trend, we've done that before, doesn't mean much. High time frame polarity and support. Yep, we're hard closing that level again today. So 193.796. That's a hard close of August 2024 range. It's the first time on this time frame. This is big. This is bigger than the monthly. And so this is kind of what I think is happening, is that the monthly might look like it's this big scam candle with this huge wick on the top of it, but I don't think people realize that the bigger time frames are actually closing stronger moves than some of the lower time frames, which means the lower time frames will simply move to create the structure as instructed by the higher time frames. So it looks like, you know, this is again a target up here at about 259. And 259 already had its high time frame rejection. So, you know, chances are the next candle can close over the top of that and go into price discovery. It's starting to look pretty cool. This is an example of ping pong. So you've got your high time frame support down here, right, which is 101. You had your high time frame resistance up here, it's 259. So we hit 259, we go to ping pong down to 101, and guess where we were going? 259. So there's no real local support trend and stuff like this, which still allows it to, you know, range and stuff around and all that kind of stuff, but it's heading up here. That is also where our trend is. So this has already had its high time frame rejection. Chances are we get over that and then we head to this 300 plus area. So SOL is looking very bullish. On 36-day, another hold level, 189. 189 has the most confluence across all levels. If it gives some kind of dump, it's probably going to be to 189 or less. Like, it'd have to be some kind of, you know, tweet-induced dump or something. I don't think it's just going to be a bleed down or any of that kind of stuff. Yeah, but it should go up. What else we got going on? weekly. As you can see, they pulled that weekly candle back up above the trend, looking good. So, and 2 week. So this was the entry box that I suggested to people in the Discord for the 2 week. And then these are sort of your TP levels up here. So as you get into the 250s, 264 area, and then up here in the 300s, it literally just touched the top of it. So that's kind of how bullish this actually is right now. Like it didn't really even bother to dive the trend, or maybe that is coming. So it is something like we might just head up and then have a dip down and then go up. So yeah, if it dips into that area, it's definitely a buy zone. So that's looking good. And monthly, I mean, if we do just keep pushing up and we close over that 234.026 on the monthly, then that's, super bullish. I don't think there's, so this is that's creation, that's rejection. If we get a trend move, we could reject off this trend, once we get back up into that. I mean, there are possible ways they can reject this, and sort of, masterclass type stuff is that this candle here, this is like a range hold candle. It's designed to stop the price from going any higher. This is the break level, top of this candle, this one here. The break level's been hit. We haven't closed over the break level yet, but we are about to hard close above the hold resistance, which is this level 1 here. Now, sometimes when you hard close, and it also happens to be that 189 level, but from the other direction, sometimes what happens when you hard close above it's like anything, everything's just levels, right? So if you hard close a resistance level, there is the possibility of a retest of the resistance. And it doesn't matter whether that's a hold level, a trend, a range trend, it doesn't really matter. They're all just levels. And what you can see is something like, this happen, before it goes up, it does some kind of move like that. So with this moving to the top side, you may get something like that. You may get continuation to the trend after the trend shifts as well. And so maybe we go hit that trend because it just stays bullish. And then we get some kind of whatever shock news tweet and we come back down here. And when you just sort of just look at the chart and you think to yourself, well, if I get rid of this line, you'd think there's just nothing there, right? It just looks kind of like a free space. But once this hard closes inside here, this actually becomes almost like a reverse of what that's intended to do. So yeah, we might still see that 189 based on that. The most bullish thing that could happen this month is that we close the month over 234 or 243. If we close over any of those levels, we get these tiny little flags forming. You can never do this. I need to learn what I'm doing with triangles. Hey, look, there's a triangle tool. I wonder if this works. Watch me be a complete idiot. How do I? Oh, come on. Well, you get the gist. There'll be a triangle in there somewhere, right? Just that front part of it. The rest of it is me not being able to do it properly. So you'll get some kind of little triangle in there, and you get some little smash breakout, or smash breakdown. And of course, that triangle could end up being. Let's see if I can get it right this time. A bit bigger. It could end up being like that triangle. Depends on which level it closes. Depends on which level it closes over, and it has some kind of little thing in there before it can move out. So, yeah. So that's that. And this is just more fractal time. We've bounced the levels. We could just be going straight to the 253 level. There may not be a pullback. So that's what that's telling us. There's our 18-week structure, which started quite some time ago. This is, from an 18-week perspective, this is all accumulation. So let's stop a whole bunch of people out. Let's get all their positions, and then let's head up. This is the highest fib target we have currently, so that's 286, and it's looking like it's done that accumulation. So you can also watch these levels for polarity on lower time frames, just to see, once we get above this level, do we suddenly get volume coming in? Because that's kind of like, we've accumulated, we're back up above here, volume comes in, and you start moving up. So that's kind of what that's saying. And probably the only other one, which I don't know if I have charted up to look at, BTC 3 month. No, do I have it? No, I don't. Probably the only other one to look at is going to be the 3 month, which closes at the same time as the monthly. And here we go. And yeah, it'll be our highest ever 3 monthly close that SOL's ever managed to hold on to. So that's really bullish. It does have a 179.353 level that it could come back to do a retest, which you've got to keep that in mind as far as potential dips. And a range trend which is below that. So heck, it could happen, but at this stage, I can't really see how that would happen in an absolute straight line. Maybe a push to the 260s first. This does kind of give a bit of confluence with that 260 level being some kind of resistance level, because it could push up, hit the backside of this trend, and then have some kind of reaction to that. So we might still see some kind of dump, but that's why you have stop losses. And just when you're dealing with the lower time frame stuff, you just move them up, as you go. So if we put like a line on that candle there, and we just have a look at this on a daily. So yeah, we haven't hit the backside of that trend properly on a daily yet. So it looks like it's sitting at 261. So there were some other levels there that were in those 260s to 264s, that kind of thing. So yeah, and let's see if we, and we also haven't hard closed below it either. So it's a recoverable trend. So yep, don't really know what will happen when it gets there, but what we do know is that it's worth being vigilant when it does get there, because it's either going to recover it, bounce off it with volume, and that's where you'll see like even just something like a daily close above it, and then just it could skyrocket. Or what you see is you see it hit it, and then just sort of get like a bit of a vast, or a bit of a quick reaction to it, and sort of the kind of reaction that just takes you a bit by surprise given the time frame that you're looking at when it touches it. So okay, let's have a look at these others. So SUI back up inside trend, created a hold level, bounced off the hold level, going up, looks good. It's hit a hold level, it's a lower time frame. Yeah, it's got a local, it's built a new local trend. It's bouncing off that as well. As long as it sort of holds that sort of local trend, I think you're pretty good. It may be trying to retest the global trend up here at about 336. But what it is ultimately trying to do is it's trying to come up here and retest the backside of these broken ranges, up around that 3.4. And even that range trend, they violated that range trend without a retest, and range trends get retested more so than ranges or normal trends. So yeah, we may be, what's that, 3.5s. Yeah, so this is looking good. And then you've got some hold levels around 3.6, another one up there at 3.7. It's looking good. Even if this dips down, it's probably just worth buying more. Actually, perfect entry on this, if it does dip, is going to be this 3.1908. So you got this daily range, you've violated it, you haven't hard closed underneath it, you've come back up, this candle hasn't touched it. This is exactly like the hype entry. This is exactly like the hype entry. This is, let me just show you that so you can see what happens from this. Okay, see daily range, violation, subtly did not touch it. Next candle comes down, hits it, volume, pushes it straight back up above the trend, and then it's going to bounce off the trend and it's going to build a hold level. It'll go up, it'll create a hold level here, it'll bounce off the hold level, it'll start ranging. So this is time developing price. So SUI's running a little bit in behind that, but if it does dive that local trend, it'll have all the trend energy from diving the trend. This will become high time frame support, so kind of like weekly level support, even though it's on a daily chart, and then it could pump, which means you'd want to move to your weekly chart and have a look on your weekly to see if there's a weekly level that you could target, which would be here or there. $3.94, target the weekly break level, or target 4.3. I think 4.3 would be the target on the weekly, because 4.3 could reject. So if you build masterclass stuff, if you build weekly support on a daily scale, the thing that can reject it is weekly resistance of the same type, because this is more than weekly resistance up here. This would be monthly resistance, or something bigger than weekly anyway, 4-week resistance. Okay, so that's that. And let's have a look at NA. NA is bouncing off that same thing right there. So so ENA is meant to be getting down to about 54 cents, but just bear in mind that if this thing gets back up and closes above those trends, you might not see 54 cents, because this is now doing that bounce from that high time frame support. So yeah, if it gets back up inside trend, it would be worth starting the position and then aim for these upper levels straight away from there. You may not see 54 cents, or it might dive down to complete the monthly and then go up. But either way, that is doing the same thing. It's building high time frame support. And so's this 1940, better level. May not get there. It's got a hold level at 1978, but this looks like it's gearing up for a pretty good entry. The only thing that's bad about this is that it needs to do it today, because you don't really want it to go under the trends, hit the entry, and then have to struggle to get over the trends. You kind of want it to do it probably before you've seen this video. Go down, get the entry, and go up. What else we got? This is dying. So that level that was running through there was your high time frame support. That was your bounce in there. This was the hard close, the loss of it. This is the rejection of it down to here. It has to either create it again here, which would take it, this has to go up a bit, then open the next one, then stay above it, then come down to use it. So this is still, it could recover from there, but it's looking definitely like it's the straggler. What else? I hate Cook. It's all right. Every time I look at this, I think to myself, I made 100%, sold it, and then it kept going. Oh well. So that's in a hold level. It's closing above, so it may bounce off any of these levels down in here and then keep going, but that looks like it's that was the level. There, confirmed, trend bounced it initially, high time frame support hit, price go up. Okay, so missed that one. Had the line on the wrong line, not perfect. Hype. Yep. You've probably missed the best entry you could get on hype for now. And it may come and retest that in the future, but once it gets back up inside this trend and forms a hold level, you'd probably just enter on the hold level and then go up from there. So that could mean, what's that, daily? In a couple of days' time, there'll probably be an entry around that 47 area, unless it just takes off. Also, it could bounce to the trend again and you could enter from there. It could also convert this again. It's possible. So what else? It could convert that down there at 43. Oh, no, it can't. 40. Yeah, possibly missed the best entry on that one, but second best entry is probably going to be trend. Okay. Say, actually kind of looks, this one was, a while ago looking the best of everything, and then it's now looking pretty average. So this needs to get back up above 29309. Otherwise not touching it. Maybe worth entering at 21218 if it goes down. Yeah, if it gets over the trend, and then target these upper levels, but for now, no. ASTER is really new, so this is kind of open to debate, but pretty much there's not a lot of point charting this above the 4 hour because there's just not enough information. But even on the 4 hour, it's kind of ranging inside ranging. So trend lines on this are not right depending on where you run them from. So you've basically got this initial range, which is that, and it still exists, it's still in play. And then you've got this range, which is inside of it. Okay, and there was a slight deviation out of the bottom of that. So whichever way price breaks means you're going to head to the other bounds. So there was a very slight deviation out of the bottom here, and that tends to indicate greedy whales wanted to buy at the cheapest price of the range. And it has generated high time frame support on here, but it hasn't actually used it. So I'd be keen to look at an entry around 1.7640 on this, and to try and target the break of the range to the upside and then the continuation to the top of the bigger range. So that's but you've also got to put some different trends on this, because if you're looking at this, you've got to go with your actual interior range trend is that one. So it looks like we're kind of in between the two. You really want to see it get up over that 1.9245 with a 4 hour candle close, and then you're breaking the interior range, in which case you could look to some of these upper levels. But some of these upper levels are actually pretty solid resistance now. So this level here, which is, so that one's already rejected. So 20533 created the downtrend. A lower time frame rejection in here also existed, but a higher time frame rejection of that hasn't happened yet. So basically 20919 could be problematic to get over. It might cause a dip. This is a 4 hour, so it could actually hit a daily target. There is sort of, like, when you look at this on the daily, there is the daily structure is just not well enough developed yet to try and get exact levels out of it, but we've got a pending daily, oops, get that out of the way. We've got a pending daily short that's incomplete down to 1660. So that 4-hour rejection just up above $2 could potentially kick off the actual final part of the short down to 1660. And in here, which has got perfect confluence, you've got kind of an underformed hold level, like it wasn't properly engulfed because it's just too early, but you've got, notice that at 1.6650, you've got the body of this candle that was almost engulfed, but then there was development of a higher time frame range after it. So I think you might get a little push up, a little dump down, and then a move up with this one. So, but if you're unsure, just don't trade it. It's new, and it's very hard to get exact levels on new tokens because they just don't really have enough high time frame structure yet to determine what's going on. But it is definitely trying to build it. So we so it's not going to die is the gist of it. Yeah, so it's definitely trying to build it. Whatever happens with this range, if it moves back to the top of it, rejects and breaks out the bottom of it, the breakout of the bottom of it will lead to the daily structure getting created. So that's about that. And I think DOGE. There's a guy goes by the name of a cat meme, otherwise known as Blue Dragon, in the Discord, who just wanted me to have a look at this. This does look like it's holding inside its accumulation range. It's got a lot of levels it could reject off, depending on how this closes, but this is a weekly, so we've got a week to go. But if it actually gets up over these levels, by the way, it's going to skyrocket. So especially if it gets over this one. This, what is that level? 26875 for a weekly close, or 28798 for a weekly close. If it gets over either of those, then start targeting these 40-cent break levels and these 50-cent break levels again, and or 46-cent break levels and maybe all-time highs. So that's Doge. Yeah, that's us. Cool. Well, like, subscribe, and all that kind of stuff, and we'll catch you again on the next one. Cheers.